guys, I'll be taking you through accounting specific on creditors reconciliation. What I can tell you about accounting, guys, is accounting is an easy subject. It's an easy subject if you do all the basics well. So I'll be taking you through creditors reconciliation. Then after this video, I'll make another video solving the problem. Right now I'm going to show you the basics of accounting and what you need to take into account before attempting to answer the questions. So guys, let's start. Basics of accounting and source documents. So the most important thing in accounting that you have to know is to be able to identify where you record your transaction, whether on the debit side or on the credit side, and the reason behind that. Like, you have to know why you are recording on the debit side, you have to know why you are recording on the credit side. So I'll be taking you through that on this slide. So if you can check here, it is an asset plus drawings plus expenses equal to owner's equity plus liability. What does this mean, guys? This simply means that assets and drawings plus expenses are recorded on the debit side, or when you open the account, they must have a debit balance. That's why they are on the left side of the equal sign. So all this owner's equity plus liability, they are recorded on the credit side. That's why they are on the credit of the equal sign. So when we talk about assets, we're talking about things like vehicles, cash on the bank, equipment. So those accounts, when you open them, they must have what? The debit balance, no matter what. And drawings. Expenses, we're talking about things that you pay for water, electricity, depreciation, those stuff. Stationery, they must have what? The debit balance also, because they are expenses. So owner's equity was talking about things like sales. When a business does its sales, so the sales, because increases income, so it is an owner's equity, and therefore you record it on the credit side. When we talk about liabilities, we're talking about loans that you take, mortgage bonds, things like that. So all this must have credit balances. So this is the basic and the most important step to know in accounting. If you master this, then you are fine with accounting. Then, because we are dealing with creditors reconciliation, another important thing that you must know before recording or analyzing transaction are the source documents, because creditors reconciliation mostly talk about source documents. So if you master source documents, I'm telling you, you'll go far, you'll do it with no problem. So let's start looking at the few invoices that I gave here. We have the invoice, which is a document by a creditor to the business for goods or services purchased on credit. So let's say you have a business and you buy your goods to sell from the farmer, maybe in Cape Town, as an example. So that farmer is your creditor. So because the farmer is your creditor, when you buy from the farmer on credit, the farmer will give you what? The invoice. Do you understand that? Okay, let's go to number 2. Then we have a credit note. A credit note is a document issued by a creditor to a buyer for sales returns. What does this mean, guys? This simply means that that farmer that you buy goods to sell from, if that farmer gives you a credit note, it means you as the business, you are returning goods to him. Maybe the goods are faulty or something like that. So the farmer will give you a credit note for the sales returns because you are returning the sales from him. Then we go to number 3. We have a debit note. A debit note is a document issued by a buyer to a creditor for purchases returns. So you guys, when you return those goods to the farm, to that farmer that is in Cape Town, as per our example, you will write a debit note and give the farm. So the farmer in return will give you the credit note in return, acknowledging your debit note. So the difference here is a debit note is written by you. It's written by you, the business. It's written by you, the business, returning goods to the buyer. You write a debit note, and when you give that debit note to the creditor, as per example, which is our farmer, the farmer will give you a credit note acknowledging your request. I hope this is clear. Then we go to our last one. We have a check. A check is a written order by a depositor instructing the bank to pay a specific amount to a recipient from the depositor's bank account. You as the business, you write a check. Maybe someone has rendered services to you on credit or whatever way. So let's say someone has rendered services to you as the business. So you didn't want to use EFT to pay that client or that person who rendered services to you. Then you wrote a check and gave it to him. So that person will go with that check to the bank, and the bank will pay him as per your amount of specification on that check. I hope that's clear. So when we go forward, when we are looking with, when we're dealing with this creditors reconciliation, guys, you must take note of this. You must take note of correction of entries. What do we mean by correction of interest? There might be some transactions that are wrongly recorded, then you have to rectify them. And when you rectify them, you do the following. If an amount is wrongly debited or credited, rectify by debiting or crediting that amount times 2. I know by reading this it sounds like it is complicated, but it's not complicated. It's simple, very simple. It is very simple, guys. So I even provided you with an example here. Let's look at the example right now. It's XYZ Ltd recorded a credit amount of 2,000 as a debit, and this has to be rectified. So this business called XYZ Ltd has recorded what? A credit amount of 2,000 as a debit. So they recorded an amount of 2,000 that was supposed to be a credit balance as what? As a debit. And we need to rectify this. So it means they recorded the amount of 2,000 as debit, but the amount was supposed to be recorded as a credit. So this is the example. This is the example that is here. Then its correction will be as follows. Because the amount that they debited was supposed to be a credit, according to accounting, to cancel a debit balance you must credit, and to cancel a credit balance you must debit. So it means that to cancel this amount, we have to credit. We have to credit to the 2000. So when we credit the 2000, it means we have cancelled this entry. But recording only the 2000 doesn't rectify the mistake, because the 2000 is only to cancel the mistake of debiting this amount. So when we rectify, we write 2000 times 2, which is 4000. Why do we do that? Because the first 2000 that we recorded on the credit was only to rectify the mistake here, to cancel this entry, because this is a debit balance of 2000. Then if we credit it with 2000, it means 2000 minus 2000, then it is 0. Then we are cancelling this transaction. So after cancelling the transaction, we must record the amount in its original spot or in its credit side, as per example here. So it means it will be 2000 of cancelling this entry plus 2000 of recording the transaction correctly, which makes it 4000. I hope this is clear. We will see more of this in the next video that I will be showing you how to prepare the creditors reconciliation. You will get a better understanding when we are doing that. For now, I know it may sound complicated, but with these basics that I given you, you'll be able to attempt and correctly prepare the creditors reconciliation. I will see you guys in the next video. We will attempt to answer the creditors reconciliation question. Thank you.